Hello, hello, welcome back again. So, this is what happened today with Gamestop. We had a 30% increase, almost 31 actually. And we want to be taking a little bit of a look at the company. This kind of move wasn't really caused by anything, there was no news, nothing really that happened. It's just another sort of like a time when people just keep on buying and they raise the price. And this is a very, very well known meme stock, became a thing about a year ago when it caused a massive short squeeze and a lot of institutions had to sell onto the insane increase in price. And you will see that the 1 year high was $344, which is currently 64% down the stock of price right now. And so it has lost a lot, of course, but it used to be sort of like a $10 stock for a long time. Now, we're going to take a little bit of a look at some of the financials of the company and see whether it's worthwhile entering, of course, because that's what we do here. But we're going to examine that objectively, as we usually do with stocks. Over here in this channel, we're not about diamond hands and things of that sort. I actually trading GameStop is a fine opportunity right now because there's a lot to be done for trading the stock for for movements that have to do with like daily trading or maybe some swings potentially. But for long-term holding, it's a completely different story, and that's what we're gonna be examining here. So, first things first, the thing that actually I was noticing and it looked a little bit weird is the fact that the company actually does buy back shares in the last 5 years. This is the last 5 year increase or decrease in shares, and you will see that there is a decrease, but in the last year where the whole thing has happened, the whole insane increase, there has been an increase in the outstanding shares. So the company has been printing a little bit of extra shares. And bear that in mind. Generally speaking, the company has been buying back shares, but they took the opportunity to issue some more when the price of the stock went really, really high, and that's kind of to be expected. But as an investor, you should bear that in mind. Now, the P ratio of the company looks terrible here. Look at that. It used to be positive at some point when the company was making money, but now it's actually negative because the earnings of the company are negative. And you can see how it has been pretty horrible here. And the price to free cash flow ratio is similarly bad. It's either very high or right now negative because again the company is not making any free cash flow. And the 5 year revenue growth, again going down and down and down, a little bit of an increase here, but overall in the last 5 years revenue is down about 30%, which is a very, very bad thing to see for a company, of course. And look at the 5 year net income growth, which is the profit. The profit has been absolutely decimated here. A little bit better since 2019, but still, I mean, it's firmly in the negative. So not great to see. The price to sales ratio is a little bit better here. We typically want to see things that are like less than 2. The debt to equity ratio is a little high. Actually, it's pretty high. 118% is what that means here. So for every $1 of equity, we have $1.18 of debt. That's what it means. And the current ratio of that's the total the current assets divided by the current liabilities. So we have a few more assets, so that's good, than liabilities. But look at these returns here; they're all negative, and the price to book ratio is relatively high. You can find higher ones, of course, so that's not the biggest concern. But as you can see here, you can see in the social trends module here that there has been an absolutely insane increase today. When you compare it to yesterday, 200% increase, 273% increase. And as I'm refreshing these, I'm getting new values that are higher and higher. So it looks like there may be a little bit of a continuation tomorrow, potentially, based on what I'm seeing here. Again, based on all these likes. Now that doesn't mean that it's going to be a positive continuation. It could very well mean that nothing much happens. But it looks like we're going to have increasing volume. And sentiment seems to be going down a little bit. So that's interesting to see. By a negative sentiment here, it means that, as you can see here, it's less positive activity. So people tend to be more bearish in their comments. That's what it means. So what we do want to examine next, we have of course taken a little bit of a quick look at the financials, but if you take a little bit of a closer look at the income statement here, you will actually see the exact numbers. The net income is basically in the negative, and the other thing that I wanted to point out is the free cash flow, which I always like to take a look at, is marginally positive here, but it has generally speaking been doing really bad over the past few years. And what we're going to do is we can actually take a little bit of a look here at our stock valuation tool, and you can see that we can use all these values here that are generated by the tool. And as you will see, we have a 5-year average, and some of the values are actually not reported here, but we can still use this to potentially calculate what we project for GameStop. And as you will see here, the revenue growth of the company is a little bit all over the place. Again, over here, 2022 is a little bit better, as you can see. But the projection that we can potentially use here is, let's just go with, let's just say 3, 4, and 5 here. And the net income margin, the problem is that this is negative, and this has been negative for the most part. Now the thing is, if we use negative values, we're gonna get negative stuff, cause negative response, because we have no profit, and so that matters. I will use low ones, 1, 2, 3, and kind of hope that the company is gonna be profitable in the next few years in terms of its net income. And the free cash flow margin, again, all over the place, because a lot of this free cash flow margin doesn't come from the net income, but it's mostly other things that are increasing it kind of artificially. And this is why this model correlates the free cash flow to the net income. This is why we're doing it this way. And so I will go with something like, based on this, let's just go 20, 25, and 30. And the annual return that I want to get, this is a trickier stock to hold, so I want to be getting a little bit more than the usual. So I'm gonna go for 15% here. It's a much riskier stock, this one, based on its price and based on its financials. And as you'll see here, we're way lower than what we'd like it to be. And the current price is sitting at $123, and this looks like it's a $5 stock on the medium projections, and these are also confident ones again. And so the high ones are at $10. These are the most confident ones. But regardless of which one you choose, the current price is way more than we'd like to buy it for today. And so a potentially value investment could be near 5 or less, I would say. Although these kind of financials don't really inspire me to invest in the company as it is right now, because it's again, if we take a look at the stock analysis, the main things, I would probably more than likely stop at these values for the most part and not even take a look at the stock evaluation tool, because the 5-year revenue growth being down and so negative, and also the net income growth also being that negative, price to free cash flow also negative, P negative, the company is not profitable. And with this kind of price, I just don't know how I could potentially enter this company. This is just, as it is right now, a company that you can use to trade and potentially make some money trading, but be very careful about holding this thing for the long term. Be extra careful. I wouldn't recommend. So hope you enjoyed the video. If you did, please leave a like and subscribe. I'd like to see you around. And you may want to take a little bit of time to take a look at the video that I made earlier today, and I'm discussing a company that is way better than this one in terms of a long-term investment, and that is Alibaba. And in that video, I'm actually talking about Alibaba's share buyback program, which actually they just announced they're gonna be buying back even more shares than what they intended to earlier. So thank you for watching this one, and I'll see you soon in the next video. Bye bye.